Welcome back to the show. Today we're diving into something fundamental but often overlooked: asset classes and trading. So many people jump into the markets without truly understanding what they're trading.
Exactly. And there's more out there than just stocks, right? I mean, trading is like a buffet. Stocks, Forex, commodities, crypto, options, each with their own flavor.
Let's kick off with the most familiar dish: stocks. They represent ownership in a company, and stock trading is practically synonymous with the word investing.
Yeah, stocks attract everyone from beginners to Wall Street pros. But what drives those price movements? It's not just company earnings. It's economic data, investor sentiment, and sometimes just good old-fashioned hype.
Right, and strategy-wise, it's usually a mix of fundamental analysis, where you're digging into balance sheets, and technical analysis, which is all about reading the charts.
But let's not forget the risks. Stocks can be seriously volatile. One bad earnings report or a CEO scandal, and bam, you're down 20%.
Totally. Now let's shift gears to Forex, the foreign exchange market. It's the largest, most liquid market in the world. Trillions traded daily.
What's wild is that it runs 24 hours a day, 5 days a week. If you've got insomnia, Forex has your back.
Laughs. True, but with great liquidity comes great responsibility. Currencies move fast, especially around economic data releases or geopolitical tension.
And don't forget leverage. It can multiply gains, but also losses. It's a double-edged sword for sure.
Then we've got commodities: gold, oil, wheat, even coffee. These are tangible goods, and trading them can be a way to hedge inflation or bet on global trends.
Commodities are interesting because they're influenced by so many things. Weather, wars, even harvest seasons. It's like trading based on a global chess game.
The analysis here leans more on fundamentals, like supply and demand, but technicals still play a role.
But again, volatility is the name of the game. One hurricane can spike orange juice prices overnight.
Now, let's talk crypto. This one's the Wild West. Bitcoin, Ethereum, and a million other coins popping up all the time.
Crypto is insanely volatile, but also fascinating. No central banks, no middlemen, just blockchain and belief.
Traders love the technical patterns in crypto, and the news cycles, like a single tweet from a billionaire, can trigger insane price swings.
But it comes with serious risks: regulatory uncertainty, hacks, liquidity issues. It's not for the faint of heart.
Finally, we've got options trading. This one can get complex, but it's powerful. You're not buying the asset, you're buying the right to buy or sell it.
Which opens the door to tons of strategies: calls, puts, spreads. You can hedge a portfolio or go all in on a speculative play.
The challenge with options: time decay. The closer you get to expiration, the more value you lose, especially if you're holding a losing position.
And the risk can be huge. Some strategies can even lose more than your initial investment.
So when it comes down to it, choosing an asset class is really about knowing your risk tolerance, your goals, and your trading style.
There's no one-size-fits-all. You might love the predictability of stocks, the speed of Forex, the raw materials play of commodities, the excitement of crypto, or the complexity of options.
And honestly, you don't have to choose just one. A diversified approach can make your portfolio more resilient.
But whatever you pick, do your homework. Understand the market, the risks, and the tools before jumping in.
That's a wrap for today. Hope this helped demystify the world of asset classes a bit.
And if you're just starting out, remember, knowledge is your best investment. Catch you in the next episode.